Junk Fee Prevention Act. Hard to say. I'm asking Congress to take the action so this makes it a matter of law.
One thing that's been proven to be almost guaranteed is that every time there is some kind of massive scare in the world, pandemic, a war, a terrorist attack, or something to that effect, there are usually widespread, sweeping changes to not only laws, but the powers of the government, and usually some impact on people's basic rights. Well, there's something that happened just a day after the outbreak of violence in Israel, and it hasn't quite sat right with me. But this is not about the war, but in fact, what's happening while everyone is paying attention to the war. Check this out. Now, many people might remember that just a few moments, what feels like instantly after the violence broke out, the White House came out, Joe Biden came out and made a speech about, get this, junk fees? That's right, I'm about to play you this clip from Joe Biden talking about junk fees. You know, those extra fees that Ticketmaster charges you when you go to see a Taylor Swift concert. Obviously, when you're seeing World War III erupt, getting a bargain on those Swiftie tickets is the #1 priority for the country. Listen to this.
What my friends in the front row here mostly support, the Junk Fee Prevention Act. Hard to say. Anyway, but all kidding aside, I'm asking Congress to take the action so this makes it a matter of law.
Well, no, it's not really hard to say Junk Fee Prevention Act, though it is very difficult to witness the president stumbling through such a sentence. That is a totally different topic. Let's talk instead about the actual substance of what this Junk Fee Prevention Act is. As we can see here, the White House is announcing new efforts to crack down on tens of billions in junk fees. Now, according to their official release here, junk fees are hidden surprise fees that companies sneak into customer bills, increasing the costs and stifling competition in industries across the economy. Last year, blah, 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 blah. Now, the administration itself is highlighting its effect on your everyday workers and families going out to pay their, cable bill, to go and attend a concert, to do stuff that hardworking Americans love to do. There's actually a part of the bill that nobody's paying attention to, and this is what caught my attention. The rule would not just return money to people's pockets, but also restore a degree of justice to American families and restore fairness throughout our markets. The CFPB is targeting big banks, highlighting consumers' right to access to complete, accurate, and free account information upon request, according to a 2010 federal law. Again, the main point of this bill is not about your Ticketmaster fees. This wasn't created for all the Swifties out there. Once again, this goes a bit deeper. Check this out. CFPB has slapped Wells Fargo, Bank of America, and Regions Bank with fines, citing extraneous overdraft fees and overcharges in recent years. Further, to address the big bank's monopoly, the Bureau will issue a proposal letter this month to require financial companies to allow the easy transfer of customers' banking transaction data to competitors. So while the media is actually reporting the bill like this, Biden says the FTC's proposed ban on junk fees will help families and, quote, honest businesses. Salt to the earth Americans. That's who this bill is going to help. We actually see that this is more targeted at the banks. Just in the last few months, we've seen dramatic changes to the amount of lending going on from the banks. And that's because as interest rates have gone up, the banks have to be tighter and tighter about the people they lend to because it's harder and harder to get repaid. We'll talk about in a few minutes the record level of defaults going on in the auto loan industry, in the credit card industry. We know all too well about student debt. You've heard nonstop about commercial real estate being underwater, and we'll of course hear about finally domestic real estate being underwater. This leads to a ton of bad debt that will never get repaid on the bank's balance sheets. So it's important to understand that this is in the context of newly unveiled banking regulation. One of the biggest changes to banking regulation here is that banks with over $100 billion in assets, the big banks here, would have to now use risk models, meaning determining who they lend money to. That would actually not be in their control. The new rule would force banks to use a standardized model that is more conservative than their own in terms of assessing risk. What does that mean? Well, that means that even though the banks have clamped down, have stopped lending money increasingly to more and more people, well, that's going to get even worse. And that this new legislation will make it so banks don't even get to decide when they lend money, but that an external party will decide who is creditworthy and who is not. Think about that. An external credit system, a credit system that's not up to the banks. I think you very well might be sensing where I'm going with this, because yes, this is all part, in my opinion, of a unified plan, which I'll explain at the end of this video. If you guys are excited about this, make sure to smash that like button, because this one is going to be crazy. And you might be saying, Elliot, this is just a bill that was in the works. You know, the Biden administration is really concerned with junk fees, and this is something they've promised and they're following up on. It's just a big coincidence. Well, maybe it is. And maybe on October 11th, on the exact same day, we have Newsom in California signing a bill that's banning junk fees in California. Again, Californians will know upfront how much they're being asked to pay and no longer will be surprised by hidden junk fees when buying concert or sports tickets or booking hotel rooms for their family vacation. Again, guys, this is just about those Taylor Swift tickets. Don't worry about it. That's all this is about. That's all this is about. Just forget about this. We're banning fees. We're making it easy for you to see Taylor Swift. That's all. So to recap, interest rates go sky high. Banks start defaulting. In response, the government makes it so that banks no longer get to control who they lend to. Credit conditions contract, putting an even bigger squeeze on the little businesses and the hardworking Americans. And we know that this is true, and we can prove this, as new data from the last few weeks is showing that only the top 20% of earners in America have any excess savings from the pandemic at all. You've been seeing all these predictive studies that the United States consumers will run out of money by January 1st. Of course, this is Q4, where everybody spends the most amount of money as well, which is a deadly cocktail right now to be overspending if you are in the type of category where you have no savings left. But we're also seeing credit card and car loan defaults hitting a 10-year high as inflation squeezes families. Again, I did some more digging on this, and I was actually able to find a ton of crazy clips and some anecdotal evidence here. Check this out.
Repos, and more repos. Auto repossessions are becoming a huge problem and could cause our next financial crisis. We have so many repos going through the system right now, there are not enough recovery drivers to even pick up the ones that need to be picked up.
That's right. Secondhand car dealers, used car dealers, repo dealers, wholesale car dealers are reporting astronomical increases in car repossessions. And that means that people have just given up on paying their auto loans. What does that really mean? Well, again, more bad debt in the banking system. That all trickles up to the banks and who lent against those vehicles. But there's more.
Today, I'm going to be talking about some of the bad things about the handyman business that I have never experienced before since I started this business. And that is no jobs. I would say 3 months ago, I started noticing my phone not ringing as often. I was still getting jobs, no issues at all. I'm still making money. Then, I would say about 3 weeks ago, I don't know what it is, I don't know what happened, but everything dropped completely, like 99%.
Wholesale car dealers seeing repossessions skyrocket. Handymen, over the last 3 weeks, seeing their jobs plummet 99%. And this is as reports are showing that people are out of their pandemic savings and just in time for banks to completely change who they lend money to. Of course, making it probably impossible for lower income people to get their hands on loans. And we all know that housing mortgages are so astronomically high, it makes no sense to refinance your home, which has always been a reliable way to pull equity out of your house, to essentially pull cash out of your house for living expenses. That's how most people operate, is their house is their sort of financial backstop. They remortgage their house if they need to, and they pull cash out of it. And that's the way that they get through the hard times. Well, you can't really do that when mortgage rates are sky high. You're paying astronomical high interest rates to pull cash out of your house. So how does this all connect back? How does this all connect back right now? I'm going to be telling you how this all connects back to what we're seeing in the Middle East, to what's happening in the cryptocurrency industry, to what's happening in the economy, and to the election year that we find ourselves in. First, I want to show this article because you might have also noticed that as soon as the war broke out after the Hamas attack on Israel, what you saw was articles like this. Palestinian terrorists behind Israel attack raised more than $100 million in cryptocurrency. Effectively, this article just goes in and says how, crypto funded this whole thing. Obviously, without fail, we have Liz Warren here sounding the alarm here, saying that this should be a wake-up call for lawmakers to effectively police cryptocurrency as it was connected to this attack. Unfortunately, reality doesn't line up with these facts, as it's been proven that Hamas actually stopped using crypto, and the reason is that it was too trackable. People stopped donating to Hamas via crypto because they started getting thrown in jail. And so crypto, because of its permanent public ledger, made it so that anyone who is donating or using crypto gets quickly taken care of, gets quickly thrown in prison. It's honestly the worst possible way to fund terrorism. And that is why, again, this is a complete falsehood. But again, there's a saying, don't let facts get in the way of a good story. And again, the story being told here, the emotion of the story of everything going on in the Middle East right now is driving a lot of very rapid changes in policy here at home. And now I'm going to show you one more thing about credit worthiness and credit scoring that you might not have known. We have none other than Mr. Gary Gensler himself from this summer discussing how elements of social credit scoring are already in use here in the United States. Listen to this.
Look, I mean, right now you can sweep the data up from your automobile driving. It's called telematics. You can sweep up your social media usage and sort of based upon that, decide how to underwrite and make a loan. There's research, actually, interesting research that shows that if you capitalize your letters for pronouns in your emails, you're better credit than if you don't. I'm giving you this away a little bit. And if you charge your phone every night, you're better credit, believe it or not. So now, what if it happens to be that people that capitalize their letters are of a certain race or ethnicity or gender, and it has nothing to do with credit, but then we're embedding something into the systems which has inherent biases.
So already credit scores are being affected by capitalization of pronouns. Obviously, that's very closely associated with the gender pronoun movement that we've seen of late. That obviously is associated very strongly with one political party. We also have your driving patterns, your charging of your phone, your social media usage, all of these things now that really resemble and start to smell like a social credit score. You combine this information with the fact that banks will no longer be the ones getting to decide who they lend money to, but somebody else, and that is going to be decided by none other than the government. Let's cut right to the chase here. Study shows 130 countries are exploring central bank digital currencies, and you better believe the United States is one of them. But just take it from the World Economic Forum, central bank digital currency, how money could be redesigned. And we see as recent as September, California is now offering digital IDs. The steps towards a digital ID system, a social credit system, and eventually a CBDC are clear and shining for everyone to see. They are blaring the warning signs. And while everyone is focusing on what's going on in the Middle East, laws are being passed under the guise of helping you get cheaper Taylor Swift tickets. We're actually getting a reform to the banking system that will allow for them to decide who gets credit and who doesn't. And you better believe this is part of a very scary, much larger agenda. And this is a phenomenal time for me to talk about the sponsor of today's episode, which is NordVPN. Now, I partnered up with NordVPN after being hacked myself, which was the product of my personal data leaking out into the world through lack of use of preventative measures. Now, NordVPN is a product I use every single day, not just to protect my personal data, but to prevent against all kinds of threats. Things like man-in-the-middle attacks. If you're on the road, if you're using Wi-Fi at a hotel, a cafe, or anywhere but your home, people can actually embed code into the Wi-Fi routers to pull your personal information. But if you're using NordVPN with threat protection, literally just a few bucks a month, you can protect yourself from potentially cataclysmic hacks like the ones I experienced. Of course, you should always use all kinds of internet security, but a VPN in 2023, especially if you're a crypto investor, is an absolute must. As the government attempts to attack and sue things like DeFi, providers like Uniswap, and other trading facilities, well, you better believe that those front ends are unfortunately collecting your IP information, collecting information on who is using and trading crypto. In the modern day and age, using a NordVPN, especially with threat protection, is what will allow you to evade so many of these attacks. You just don't want to become another statistic on these lists of targets. Check out NordVPN. They have a 30-day money-back guarantee, so if you don't like it, you can get your money back totally risk-free. By using the link in the description, you get a big, fat, juicy discount. Not only does it keep you safer with just a few clicks for literally a few bucks a month, but as a user of this product myself, I use it every single day. I'm using it right now, and I think it's a must-to-have in crypto. Thanks to NordVPN for sponsoring this episode. So now that you all have a VPN and are aware of the trajectory of this, let's get to the conclusion here. Because what we're looking at is a situation profession rapidly evolving. We've seen a new study come out that many Americans are going out for second part-time jobs just to afford the monthly expenses of life. There has never been such a mismatch in wages and the cost of living. We are already in one of the biggest periods of struggle for Americans in the history of this country. And this is coming into an election year. So normally what you'd expect in an election year is effectively free money, stimulation of the economy, things getting better for workers, because most people decide who they vote for by Q2 of the election year. So within the next few months, you'd expect for the politicking to take full force. For whatever changes the government, or for example, the existing administration wants to see happen in the economy, you'd expect for those to try to get pushed through pretty quickly. Well, what if one of those changes is that people get so desperate that the answer that you promise them is effectively free money, but not that old free money, not those old dusty stimmy checks that had all the germs on them, not those paper ones, but a new shiny digital stimulus, the kind of stimulus that can make sure it goes to hardworking families, making sure they can get their low cost Taylor Swift tickets, making sure that those hardworking stimmy checks don't make their way into the free networks of cryptocurrency, where assets exist outside of this political system, which is inevitably going to need to print to debase the monetary system in order to finance wars now happening on multiple continents. This is a wild time of uncertainty. The announcements that have just come out of the government about these junk fees are actually indicative of a much bigger plan, part of a massive journey towards a central bank digital currency, a system of social credit, and massive control over what people can say, what they can think. And of course, in times of crisis, it is highly likely that governments will look to gain more control and take away more freedoms. And we don't even like to say these things, but look, with wide open borders that have been a hot button topic here in the United States over the last several months and years, and of course a new absolutely passionate anti-American sentiment that is coming out of the Middle East on at least one side of this conflict. We're seeing that echoed by Russia and now China. Well, tensions are starting to rise. And if God forbid something would happen that endangers the lives of Americans here or abroad, well, things could ratchet up very, very quickly. And it wouldn't be surprising to me to see that those ratchets would involve new controls over the things people can go out and do, the way people can spend money, potentially even the assets that they can control. Well, in my opinion, owning some Bitcoin in a time like this is not only going to be something that everyone is interested in, but likely one of the only ways for you to protect yourself from one of the craziest economic situations we've ever seen in the history of the world, one of the craziest geopolitical situations we've ever seen in the history of the world. And when you see things that might seem like totally insignificant blunders in a time so critical as this, it's always important to ask yourself, is there some part of the story that's not being told? As always, if you enjoyed this episode, make sure to click on this one. It's just as good. If you guys liked the video, smash that like button. If you didn't like the video, hit the dislike button. It's okay, I can handle it. My name's EllioTrades, and I'll see you very soon on the next episode.